Is the JP Morgan Equity Premium Income ETF, known as JEPI, still worth buying in 2024? Stay tuned to find out. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we dig a little bit deeper into JEPI and seek to figure out if this income strategy ETF is still worth buying in the current year, I wanted to first preface this by showing you my dividend tracker and to share that I currently own around 1,248 shares of JEPI across my multiple portfolios with an average cost of around $52 per share. So just like a lot of other dividend, more income focused investors, I also am constantly questioning which ETFs, especially high income ETFs like JEPI, JEPQ, or even qyld, are still worth purchasing, which is what we're going to find out. But to first take it back to the basics, the JP Morgan Equity Premium Income ETF, known as JEPI, has a very simple yet complex strategy. It says seeking consistent premium income with lower volatility. The JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. Now, the portfolio says defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Now, along with that, this is where a lot of the income comes into play. A disciplined option overlay implements written out the money S&P 500 call options to generate distributable monthly income. Now, before we dig any deeper, some other very important facts about JEPI. JEPI's expense ratio is 0.35%. So this ETF is going to be a bit more pricey to hold on to versus other index funds, things like VU, SPY, or of course even SCHD. But because the way this ETF works, it is going to be a little bit more management heavy, which you're going to have to pay a pretty penny for. Now, another important aspect about any ETF is to know what the top 10 holdings are, just to give you sort of an idea of what's being held in JEPI as of right now. This is what you're going to be exposed to for the most part. Things like Progressive, things like Amazon, Meta, we have Train, Microsoft, MasterCard, Intuit, ExxonMobil, Visa, and AbbVie. Now, for the most part, at first glance, these are all high quality companies, and I honestly would not mind having exposure, at least to most of these. Now, important to note, of course, on top of the holdings that JEPI holds, they also sell cover calls, which means the upside is going to be capped, potentially, even if some of these names move up very quickly in a short amount of time. But for that reason, that's exactly how these cover call, more income-focused ETFs are able to pay such large dividends on a monthly basis mostly. And as you can see, since about 2020, JEPI has paid consistent dividends every single month. Some months were a little bit lower, some months were bigger, and this is going to be due to the volatility in the market. If the market's more volatile, if the VIX is spiked, option premiums are going to be juicier. And because JEPI sells options, sells cover calls over the portfolio, when options are pricey, JEPI is going to be more profitable a lot of times. Now, another side note about the dividends and the lack of consistent dividends. What I mean by that is that some months JEPI's paid 61 cents per share per month, and then some months, even as of recently, there was only a 30-cent payout, which is very different from the 61-cent payout that investors like myself saw in October a few years back. Now, this is something very important to note, at least to have in the back of your mind, if you are considering buying into something like this to use to pay for your bills or to live off of, because you really have to be ready for some months' distributions to be much lower, because that's just the nature and how this ETF works. Now, digging a little bit deeper into JEPI, if we look at JEPI in the max time frame, one positive thing that I will say right off the bat, there is a green color on the max time frame, which is rare a lot of times when you see these higher yielding covered call income focused ETFs. Now, this is because for the most part, these covered call style ETFs don't necessarily have all that much upside potential because of the covered call overlay, but when the market turns bad, these ETFs free fall basically along with it, even though the covered call overlay should help with some downside protection. Now, because of that reason, a lot of these covered call income focused ETFs do see massive decay, which is why, as far as JEPI goes, the fact that it's even up around 14% in the max time frame is not necessarily all that bad, considering that's not including dividends or anything. So now that we looked through JEPI's dividends, we even looked through the price performance over the past several years. Let's see what an investor would have been left with if they would have invested $10,000 into this ETF. And this is back in May of 2020. If an investor bought $10,000 worth of JEPI, when back in the day it was trading at $49.94 per share, now trading in the high 56s. An investor would have been left with a total return since then of around 60.04%, or an average annual total return of around 12.91%, and this is in the last 3.87 years. Now keep in mind this is with dividends reinvested, so if dividends weren't reinvested, the average total return annually would be around 11.45%. But either way, however you want to look at it, for a higher income focused ETF, I honestly don't think that's all that bad whatsoever. Now I get it, I can already hear some of you guys during that same exact time frame, you could have just bought SPY, and over those 3.87 years, you would have returned around 17.19% average per year, which is of course much higher than JEPI's 12.91%, even though JEPI pays a much bigger dividend than SPY. But I do think it's important to note that because different investors have different goals, some investors like myself are a little bit more cash flow conscious, where we're really trying to build a cash flowing machine to pay us dividends every single month to hopefully retire off the dividends later on, where SPY doesn't necessarily have that same mechanism. Not to say whatsoever that SPY is a lesser investment or a worse investment to JEPI. In my opinion, SPY is basically king. But I do still think it's important to note that for a higher income focused ETF like JEPI, an 11 or 12% annual return so far at least, with getting massive dividends along the way, for the most part, it's not all that bad whatsoever. Now to go back to the original question, the title of this video, is JEPI the JP Morgan Equity Premium Income ETF still worth investing into in 2024? Now my answer to this would be yes and also no. Now what I mean by this is, as you saw, I currently own over 1,200 shares of JEPI and I have no interest in selling a single share whatsoever, but as of right now, I don't really also have an interest in buying more shares of JEPI. Instead, I'd much rather invest in different higher income ETFs, things like JEPQ or even things like SPYI, which as of recently I've been obsessed with. Now what's cool is that throughout the market, there are so many different higher income cover call style ETFs like JEPI or even like JEPQ across the market. And even though they all for the most part have a very similar strategy, they also have little different things that they offer that could make them potentially more favorable depending on your investment strategy and where you're at in life, etc. So if I had $10,000 to spend as of right now and I had to invest that $10,000 into a higher income cover call style ETF, would I have any JEPI in that pie? I would probably have a small portion of JEPI in that pie, but like I said, I'm much more bullish long term on things like JEPQ because of the portfolio, because of the growth potential, because of the exposure to technology, and on top of that, I really like SPYI because of the tax efficiency and for the reason that SPYI also uses some of their portfolio at times to buy SPY options. All to say that I think we proved that over the long term, at least since JEPI's been around, I don't think it's necessarily been a horrible investment. Yes, there's been other investments that have done better and have done worse. Overall, for the more income focused investors that are looking for larger amounts of cash flow on a monthly basis, I think JEPI has been just fine. And I can say that as a proud shareholder. But even more importantly, I want to hear from you guys down below when it comes to JEPI, the JP Morgan Equity Premium Income ETF. Do you think as of right now in 2024, this ETF is still worth buying into? Or do you think there's much better other ETFs like we talked about like JEPQ or maybe even SPYI? Let me know what you guys think down below in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.